talk about the accounting methods. Okay. And why are accounting methods are important? Why do we need different accounting methods? Any idea what are the various accounting methods, guys? Anybody, any idea? What can be the possible methods for filing the returns?
Cash basis and mercantile.
Cash basis and? Yeah, you're correct. But what is the other technical name for the other method?
Mercantile basis.
Or the accrual concept, right?
Accrual. Yeah.
Okay. So what is cash basis? If I ask you what is a cash basis, what will you say? What is a cash basis of accounting for income? So see, if I'm an accounting student, okay, if I am accounting student, and if I talk about cash basis, and if I say it is accrual basis, okay. So what will the accounting student say? Accounting student will say, see, income you book it in cash when you are receiving, and expense you book under cash concept if you are paying. And if you are an accrual basis taxpayer, then income when earned, when I did some work to earn that income and my obligations are complete. So if you guys give me money for training, okay, let's say EA course or CPA course, right? I have 2 courses running at the center at the moment. When you pay me the full amount, I have not taken a single class, right? So when I have not taken a single class, I cannot say that income is earned. So I will wait for the classes to get over. Then I can record the income, right? So if you guys are following Byju's, this was one of the biggest problems that the auditors noted in Byju's financials. So Byju's operated under similar method. Students give them money, let's say for 3 years, when they sell the subscription for 3 years. But Byju's was booking it as income. The entire amount is income in the year of receipt. So they said that no, you're not following the cash base. You're not following the accrual basis. And if I am an accounting student, I would say that expense should be when incurred. That means I have booked an income. Now, when I've booked that income, correspondingly, when that expense becomes due, I will have to take it as a deduction. But the income tax rules are different. Okay. And when you look at it from a very 30,000 feet level, you'll be surprised. You'll ask me, ma'am, it looks like the same thing. There's no difference. Then why are we taking 2 different methods? Now, see, this is what tax says. Tax says, if it is tax, the first thing IRS says is, boss, I don't care about your earnings process or your not earnings process. I am dead sure about one thing. So now I'm talking about tax. In tax, what is the difference between cash and accrual concept? That's what we are going to talk about. So when I talk about tax, and now when I have both the cash basis and the accrual basis, now tax has a very different stand. Tax says, boss, the income, the moment I am getting that income, I am going to book it on receipt in case of cash basis and on receipt. So basically, what they tell you is this. They say that, see, general rule, you wait for the earnings process to get complete. But the exception is if I have a pre-received. That means if somebody pays me income in advance, I am going to book in the year received. Can anybody tell me what is the difference between the 2 methods? Are both the methods same? If I give you this, are both the methods same or is there a difference? What do you say? Are both the methods same? If I give you this, can anybody tell me what is the difference? What is the difference? Give me an example where the treatment of income will be different in taxation for a cash basis taxpayer versus an accrual basis taxpayer. Can anybody tell me? It's a chocolate question. Let me think. Let me see if you guys are thinking enough. Yes? Think. Give me a reason why the 2 methods will give you different taxable income. Yes? Think. Think about a scenario like this, guys, okay? Let's say if A works, okay? And let's say if A works and is supposed to get some $5,000 as income. Now he works in year 1, he gets that money in year 2. Can you tell me in cash basis, when are you going to record it as income? In year 1 or in year 2? I got the money in year 2. So cash basis will say book it as an income in year 2. Accrual basis will say, boss, I earned that income in year 1. So I will be booking it in year 1. So this is the difference between cash basis and accrual basis income. General rule, it is on receipt for cash basis taxpayer. For accrual basis taxpayer, general rule is it is on earned. But in case if somebody receives an income, then I'm going to offer it to taxation in the year of receipt itself. Is this clear? Is this clear to everybody? This is a very big difference, guys. Pre-received income is taxed irrespective of the method of accounting being followed for tax purposes, which is either cash basis or the accrual concept. You will have to pay tax on any pre-received income in taxation. But on a cash basis, the income is taxed only on receipt. But in accrual basis, if I have done the work and still not received the money, I will not pay tax on it in this year. I am going to pay tax on it this year because I earned that income this year. I'm not going to wait for the actual receipt. Is this clear? Okay. Now see, this is like a tip. Now they've gone very detailed in what is the cash basis, what is the accrual basis. Okay. So now this is as far as the income is concerned. Then we have these expenses also, you know. So if you can draw, can I rub all of this, guys? Are you okay with it? Okay. So you will have something like this. Okay. You make what do you call it? You make it accounting rules. You make it taxation rules. Okay. Under each of this, you will have cash method. You will have accrual method. Similarly, on the taxation rules also, you will have cash, you will have accrual. It's very simple. And now you're going to hit for income, and then you're going to get for expense booking. Under cash method, when received. Accrual method, when earned. Taxation rule says again, when received. Accrual is when earned. But what is the exception? The exception is pre-received income taxed in year of receipt under both the methods. Both the methods. This also and this also. Is this clear? Then we come to expense booking. What does expense booking tell you? See, when I go to expense booking, this is what expense says. And if it is the accounting method, cash says when paid. I don't care when is the period when it is related to. Accrual method says when incurred. So if I have put something on my P&L credit, then I will see how much money I have actually incurred to earn that revenue. So that is why in accounting we call it the matching concept. Okay, that is why we call it a matching concept in accounting. But taxation, the rules are slightly different. Here, cash basis is still when paid. That is true. But we again say if there is prepaid, if somebody wants to just avoid taxes by paying off all the money in advance, we say, boss, if it is a prepaid, I am going to give you a deduction when incurred. That means I am going to not give you as a deduction right away. If I pre-receive the income, pay tax on it right now. But if you prepay, I will not let you take the deduction in the year of payment. You'll have to wait to the period to which this prepaid applies, especially in case of prepaid rent. If it is an accrual basis and if it is taxation, general rule is in expenses are offered as a deduction when they are incurred, not when they are paid, but when they are incurred. Is this clear? So this is the entire chapter. This is the entire second topic, which is the concept of accounting method in a nutshell. Now this is just for your reference. We are not going to study this in your books, but this is our starting point. So you need to know what is this. We are going to just talk about the taxation rules. Okay, so we are going to start with the cash method and then we are going to go to the accrual method. Now, when you're doing this, there are a lot of small stuff that they will bring up. Something like what happens if you're a landlord and if you're receiving pre-received rent? What happens if the company tries to give you dividend, but even though the dividend is declared on 31st December, you are definitely not going to get a check before 1st of January. So when are you going to record it as income? In year 1 December or in year 2 January? So these are specific application of cash method that we are going to do in this session. Okay. So now in topic 2, we are going to cover in details the cash method and the accrual method of booking the income. Is the premise clear to everybody? This is a hardcore concept, guys. These are see, the best part about part 2 is it is extremely simple, but it is extremely conceptual. So if you get the concepts, every question will get correct. If you don't get the concept, no matter how much you mug up, you will not be able to answer these questions accurately. Okay. So can I wrap all of this? I did not open this. So what I'll do is I'll just take a screenshot. Okay. These are things that even I never thought I would be talking. Just impromptu. 1 second, guys. Uh, One second, guys. I'm rubbing all of this. Okay. Okay. Okay, we'll go to this later. Let's first read about the accounting methods. Okay, why are we doing this and what is accounting method? It is actually a set of rules. What we're talking about are taxation rules to let us know in which year I'm going to offer an item either as income or a deduction. Okay. Generally, when I'm adopting this method for the first time, I don't need approval by anybody. I don't need to go to IRS and ask them, can I take the cash basis? Can I take the accrual basis? I don't need to do that. But once I decide to follow a method, I need to stick on to that method. I cannot change it at my own whims and fancies. Anytime I'm changing that method, so let's say I thought that I'm going to take the straight line method of charging depreciation. And then I said, no, I want to go back to written down value method. Or let's say I said I wanted to take FIFO method of booking inventory, first in, first out. But then I came up and said, no, let's do it the LIFO method, the last in, first out method. Now, whenever there is a change in the accounting principle, that means I'm changing the methods, then we need to take the IRS approval. We cannot make the changes suo motu. Why? Because IRS is always going to assume that you are trying to do it to lie, steal, cheat. That means you're trying to do to evade taxes. But if there is a change in estimate, okay, so the key word is change in estimate. If there is a change in estimate, or if there is a correction of an error, I made some mistakes in last year, I want to correct it today. Or let's say I thought that my machinery is going to last for 5 years and I started depreciating year one, year two. And then in year three, I suddenly realized that no, I don't think the machine is going to last more than this year. So I now change the estimate of charging for depreciation. So every time there's an estimate like warranty, like depreciation, like provision for doubtful debts. And if we change the estimates, I don't need to take IRS approval. So remember, whenever I'm changing from non-GAAP to GAAP, that means I'm changing the methods, but it is a correction of an error because I am not following GAAP. So if I'm changing from cash basis to, let's say, accrual basis, that's an incorrect accounting. So I don't need to ask IRS. But if I'm following one valid method of accounting and now I'm switching to the next valid method of accounting, I need to substantiate the IRS that there was a business need to do that. Okay. So how do I take the approval from the IRS? You fill up a form. What is that form? Form 3115. And that form is for changing or getting the consent from the IRS. Let's see, I want to change my method of inventory from LIFO to FIFO. This is the reason. Please let me do that. So if you don't file this form, you cannot sumoto change the methods of accounting. No change. So the keywords are, guys, estimate, no approval, principal, yes approval. Yes. Correction of error, no approval required. Which form? Form 3115. Okay.